Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. Unleashed is produced by Umbrex, which connects you with the world's top independent management consultants. I'm your host, Will Bachman, and I'm here today with Kit Lisle, who is the founder of Acclaro Partners. Kit will tell us more about what they do. It's a research and consulting firm that works with a lot of private equity companies focused on the lower middle market. Kit, welcome to the show.
Thank you, Will. Appreciate it. Happy to be here.
Okay, so Kit, first I'd like to understand. I heard the term a lot, but what is lower middle market, and what is the middle market? What's the upper middle market? Help me understand these terms that get tossed around.
A lot of times when people talk about business, what they're really talking about is the enterprise level, global companies, Fortune 500 companies, and the reality is that business mindset is very, very different than we think of the middle market, entrepreneur, small business owner. So more distinctly, the lower middle market is the mom and pop business, the small business owner, we'll call it, $2 million, $20 million, $200 million in revenue. And so that lower middle market mindset is really where we focus. And one of the reasons that we exist, frankly, is that a lot of these businesses are competing in industries that are fairly difficult to wrap your head around and understand. In other words, they may not be competing in the automotive industry per se, but rather they make equipment that's used in an assembly line that lifts batteries that are used in electric vehicles. So it's a very specific sub segment, and there's not a lot of data available about those really nichey, obscure sub segment businesses or industries. And so we help our clients understand those markets and the opportunities within those markets.
Yeah, and I want to dig into how you do that. In terms of the sizes, so just to help me a little bit, because like the lower middle market, what would the range of say EBITDA and revenue be for a lower middle market company?
Yeah, I mean, there's a lot of different perspectives on how to define that, but I would say, roughly speaking, $2 million in EBITDA to about $20 million in EBITDA, and that translates roughly, perhaps, to maybe $20 million in revenue to several $100 million in revenue. But
Okay.
the lines are pretty gray,
And then what would companies bigger than that be called? So is it just the plain middle market?
right, the middle market.
And so what would a company, so if it's like 20 million of EBITDA to 200 million of EBITDA, what would someone call that? Like just the middle market companies or?
Middle market, or they're becoming more Fortune 1000, Global 1000 businesses at the top end of that bracket.
Okay.
But the important distinction, as far as we're concerned, is that we're providing insights to help these businesses grow, and the insights that we're gleaning are not typically available. So, for example, if what you're dealing with is a company that I don't know, I'm just looking out my window right now, Will, and what I'm seeing is those rubber and wire devices that hold landscaped trees in place so that they grow straight. Well, there's a company that manufactures those things. I don't know what they're called. I don't know what that industry is called, but to somebody, there's probably a handful of competitors in the United States that manufacture those components and other things that are used by landscaping companies, right? So I'm just making this up, but the truth of the matter is that's an industry to those companies, to those manufacturers. There's no association for that industry. There's no off-the-shelf, publicly available data on that market or on customer needs. There's no public company that serves that market, so you can find data, in a 10K. So where do those competitors learn about the growth of their market or the opportunities in their market or the needs of their customers? Chances are they're going to need to use a firm like ourselves, research-based growth strategy, consulting firm to help them identify these opportunities and niches, and frankly, concerns and threats as well.
Mm-hmm. So are there, and I want to get to kind of how your firm goes about getting those sort of insights. One more question on just sort of understanding the space a bit. Are there, in the private equity world, do private equity firms typically focus on, a certain range size of companies? So are there some PE firms that focus on, larger deals, and do some PE firms focus on this lower middle market where they're mostly doing these deals with, with a 15 million or $200 million transaction size on that smaller side?
Yes, absolutely. So first of all, let's define a couple terms. So private equity, to your listeners who are not familiar with the term, most of us have heard about venture capital, and we kind of have a sense of what venture capital is, and we sort of know what mutual funds are. So they're basically the same thing. That the core difference is that the mutual fund that's in your 401k portfolio is a basket of publicly traded stocks that some experts have chosen to put into that basket, and they call it a fund. Well, a private equity fund is exactly the same thing. The only difference is that the companies they're putting into their basket or into their fund are all privately held. So no one else can invest in them. Just, this private equity owner has acquired usually the entirety of that business. And now venture capital, just to distinguish that, venture capital is the same thing as private equity. It's a subset of private equity. And venture just refers to the stage that the company is at. It's an early stage company, a startup. So when we refer to the lower middle market, we're referring to, again, those mature, standalone operating businesses that have been around long enough to be resilient. They've stood the test of time. Maybe they've remained in the family for multiple generations, but they're not huge global corporations. So I'm going to pause there and see if all that made sense, Will.
Yeah, no, that makes sense. So do PE firms tend to focus on, do some focus on this lower middle market, and then are there some below this size, below 2 million in EBITDA or below 20 million in revenue? Are there PE firms that focus on, companies that are even smaller?
Yes. Yeah, it's a great question.
What would you call that segment?
Well, there are family offices, which is a distinction that doesn't necessarily have to be made. There are independent sponsors and pledge funds that don't necessarily have the capital in their pocket, so to speak, but they have commitments from wealthy individuals who say, well, if you find us a company that we can invest in, then we will invest alongside you to acquire that business in its entirety. And those guys are typically investing in businesses that are smaller than $2 million of EBITDA, just because they don't have, they're not full of bankrolls of cash. And then smaller than that, of course, would be, venture stage deals where, $1 million investment is a pretty big deal for a startup company. At the other end of the spectrum, of course, I think it was Carlyle Group. You've got Thomas H. Lee. You've got huge private equity funds. And I believe it was Carlyle that bailed Chrysler, or maybe it was Chrysler Corporation, out of bankruptcy during the Great Recession. I may be mixing things up here, but the point is, some private equity firms are large enough to acquire, the largest public companies and bring them private in distressed situations.
Okay, so let's get a little bit into what your firm does. So you talked about how you will help, get insights on these niches where there's really not much public information. There's not even really an association because the industries are very niche, very small. Can you walk us through? Just give me an example of, either a sanitized version of one that you've worked on, and how you go about getting those kinds of insights.
Sure, that's a great question. Well, I'm going to start by describing a situation that happened to me yesterday. So yesterday we were talking to an independent company. This is a small business that's not owned by a private equity fund. And that small business is in the tube manufacturing industry. So in this case, mini or micro tubes that are used in a variety of applications. And they wanted to understand how to enter an ancillary market. In other words, an end market that's sort of next door to their own, serve a different type of customer with their current products. And the question came up, and it was pretty much the same question you just asked me. The question was, so you're going to talk to customers and competitors and suppliers and experts and channel partners that influence a purchase decision in that market, and you're not going to tell them what we're planning to do. You're going to do this on a confidential basis, and you're going to get them to tell you things like growth and unmet needs and frustrations. How in the world are you going to get them to? If you called me, I wouldn't tell you that. So you're just going to call these people up? And I said, well, let me tell you a story, and hopefully the story will paint a picture about how we do what we do. So I said, many years ago, I had a very unusual car. It was a brand new car, but it was a weird, quirky little vehicle that people hadn't really seen before. And I was at the gas station. And a gentleman walked up to me and he said, wow, is that the new XYZ 123? And I said, yeah, it is. And he quickly asked, how much did you pay for that? And of course, I was a little taken aback, and I paused, and I said, well, I don't really feel comfortable talking about that. So he kind of chuckled and walked away. Next week, I'm at the same gas station with the same car. Someone else walked up to me and said, wow, is that the new XYZ 123? And I said, yeah. And he said, did you get the sport package? And I said, well, yeah, I did. He goes, do you mind if I take a peek inside? And I said, yeah, sure. He said, can you show me how those headlights work? I've heard they're really cool. And about the 20th question that he asked me, after we developed kind of a bond and a friendship and a little bit of esprit de corps here, he said, did you get a good deal? And that's a very different way of asking essentially the same question. And to that person, because we developed this kinship and this shared common interest, I probably would have told him exactly what I paid for the vehicle. But it was the way he came about it. We had a conversation about something that we had a shared interest in, as opposed to just. So the point here is, when we do the research that we do, we're not interviewing people, we're not surveying people, we're not market researchers with the clipboard on their arm. We're just developing conversations. So the work that we're doing is really filled with people who have. I call them, our consultants, I call them Renaissance people. They're filled with intellectual curiosity. And to the person on the other end of the phone, they kind of just appear to be just slightly annoyingly curious. I don't know if that makes sense to you. I've met people like that before.
No, absolutely. So it sounds like the one of the primary sources then of insight for you would be doing interviews with experts in the industry, either potential customers or competitors or suppliers to the company that you're looking at.
Yes, but I would push back on the word interview. There really, truly are conversations.
Mm-hmm.
We're sharing, we're poking, we're prodding, we're questioning, we're challenging, we're interrupting. We're bouncing our ideas off of them, our hypotheses. It's really a discussion more than an interview, but yes, absolutely.
All right. So how does your firm go about sourcing those discussions? Certainly a lot of listeners of this show will be familiar with firms like GLG and AlphaSites. I've done an episode on how to source interviews using LinkedIn, of reaching out to people directly. What's the typical approach that your firm uses to get those discussions to happen?
Yeah, there's really three layers. I'd say the first layer is, to the extent that our client is able to share their current customers, their prospective customers, and their lost accounts, that's really truly the best place to start, is in their CRM database. Um, and then they've been in the industry for certainly longer than we've been in the industry. In many cases, we're invited into this little mini micro tube market, 2 days ago, and we know absolutely nothing about the dynamics of that market. We get smart very quickly, but they know that Bill has been in the industry for 30 years and that Bill has worked for 3 different competitors. And Bill used to be chairman and chief executive officer of the association, and that therefore this study would really we would not be doing this study justice without talking to Bill. So we rely on our clients for those kinds of recommendations, suggestions, contacts, et cetera. Number 2 is exactly what you said. There's plenty of industry expert networks like GLG that you either pay for in advance and have a subscription, or you pay as you go. So we avail ourselves of those. And then the third is, interestingly enough, let's say hypothetically we're on the telephone talking to that fictitious character, Bill. And Bill's great, loves the sound of his own voice, lots of opinions, lots of perspectives, some of them a bit dated, but nevertheless, we love talking to Bill, and Bill's engaged. And we say at the end of the conversation, hey, Bill, thanks so much. You've been on the phone with us for 35 minutes here, and we learned a lot, and we felt like this was a really productive conversation. Is there anybody else in the industry that you would recommend that we speak with? And chances are Bill would be happy to provide us with a couple names. So we call that wheeling. We wheel from one source to the next source.
And do you typically, source a lot of the interviews yourself by identifying people either via LinkedIn or
Yes.
people that attended a conference or something like that? Tell us, how do you approach those folks? Do you offer them compensation, or how do you get people on the phone?
Great question. So we do avail ourselves of LinkedIn and databases such as the industry expert networks, and then we subscribe to another database that puts contacts together from things like conferences, as you described. When we're reaching out to those people cold or blind, it's really up to us to figure out a compelling, interesting way to make the conversation worthwhile for that person on the other end of the phone. Our perspective from the beginning, we've been doing this for 20 years at Acclaro Partners, and our perspective is that if we're compensating them for their time, it sort of biases them in a way. Now, we have done that in some industries and in certain aspects of healthcare, for example. You almost have to, but for the most part, we're able to figure out a way to either share insights or bounce ideas off of people, provide them with some fodder or some ammunition to chew on, such that they feel like they're learning something as well, and it's a worthwhile use of their time. And as we said, it's not a survey, it's not an interview, it's more or less a conversation that people find engaging and that they can jump in and challenge and poke and prod themselves.
You mentioned that you use a database that helps aggregate information from conferences and so forth. Is that a resource that you're comfortable sharing on the show here?
Sure. The one that comes to mind is Zoom Info. It's not cheap, but we found that they've been very helpful for us in situations where we need to identify contacts.
Okay, cool. Where you can type in a name, and how do you use that? You've already identified a name and you're just getting the contact info, or does it actually help? You can type in some keywords and it'll give you some people in that industry.
The latter. You can probably also type in the name of the company, and then it'll find contacts that it's identified. I think you can even say, I need someone senior level marketing at this company, and I think it can, dig through its sources and see if it's got anybody.
Great. Let's step back a little bit and let's talk about your kind of a typical assignment for your firm and the timeline, the whole kind of process end to end, and what your deliverable looks like. Typically, what I understand, and what I've done, and I've done a few due diligence type projects myself, is they're typically 2, 3, 4 week efforts. What's sort of your process and what the deliverable looks like?
Sure. I'm gonna walk you through several different scenarios or situations. We'll start with that fictitious little micro tube business. So in that case, the study was all about entering a new market. So the need that the client had was, we don't have enough information about that market over there on the other side of the fence where we think the grass is greener. So confirm or refute our hypotheses about that new market. So we would call that value enhancement or research to support that company. That research or that value enhancement work is often fairly basic, fairly simplistic. Okay, so tell us about that market. Does it warrant entry? Is it as attractive as we think it is? We have to define what attractive means. We have to develop some hypotheses, and we have to, answer some key questions to help them make a decision about entry. Another example of that type of work could be voice of the customer research, or maybe something simple like a net promoter score metric. So in many cases, these relatively small businesses have never done a customer satisfaction survey on their customers. And so setting that program up is pretty simple. It's easy. It's recurring. But we do that all the time. We can do competitive intelligence. Maybe there's a competitor that they're not really sure what they're up to, how they're able to win business more effectively than they are at a higher price point. What are we doing poorly, and what are they doing so well? So we can, these small businesses aren't aware that you can actually figure that sort of thing out, and we do. So that's just research. The second scenario is strategy. So we can work with these companies to develop a 5-year growth plan that's living, breathing, that has a dashboard, that has metrics and measurements and tactics that are tied to, compensation and job descriptions, so that they actually happen as opposed to being shelf documents. But we also just facilitate 2-day offsites. I did a Zoom conference call that lasted 3.5 hours. That was a substitute for, your traditional 2-day offsite meeting, which sounded like it was going to be a dismal failure, but it actually worked extremely well. I was surprised and happy. And third, you mentioned diligence. So when you're acquiring a business, the acquirer traditionally does many different forms of diligence. They investigate the legal aspects of the company, the accounting, operations, even things like insurance, sometimes environmental. The work that we do is business due diligence, commercial due diligence, market due diligence. Those terms are used interchangeably, but it's really about the exterior of the company. And when I say exterior, sometimes it helps to think of, the diligence process as being a kind of a proxy for when you're buying a new house and you hire a home inspector to help you make a decision about whether that's a good house to buy. So they're looking at the systems, the HVAC and the roof and the electric and so forth. Well, we're not looking at the inside of the house. We're looking at the outside. So the outside in this case means customer relationships, competitive dynamics, market opportunities and threats and trends. So we study that exterior. The answer to your question about timing is that those diligence studies, you're right, they're very quick. They can be 2 weeks. 4 weeks is a little bit more common. For a fairly basic research assignment for the company itself, like new market entry, 4 to 6 weeks is pretty common. For a strategy assignment, developing the growth strategy over time with management can take months. And the two other aspects of work that we haven't talked about yet are, let's say you were considering focusing a bit. Maybe you would say, we are interested in investing in and taking advantage of the aging baby boomer population and their health, wellness, and fitness. And so you might say, that's a theme that we're excited about and we want to invest in. Now, where are those companies? Where are those industries? Where are those segments? And so we would do the sorting and screening and filtering and prioritizing, which is the key word, to help focus an investor. And then lastly is sell side market studies. So it's the inverse of a buy side commercial or market diligence study. It's basically the same thing. It's just conducted by the seller instead of by the buyer. And I could go into more detail about that if you'd like.
No, one thing that I've observed a bit over my time in the industry is that, but you have much deeper experience here, is that private equity firms are often willing to spend the money on a due diligence effort because they can kind of charge that against the deal. Whereas in some cases, it seems like they're more reluctant to spend the money on that earlier stage research of helping me scan this whole industry and understand the some potential targets and what are the themes here, because those kind of projects get charged to their actual to the PE firm itself versus being charged against one of their portfolio companies. So it's like different incentives and economics there. But could you either validate or just challenge that perspective? Do you see that they're just the sort of way that their incentives are set up affect the kind of work that PE firms are willing to fund?
You're absolutely correct, 100%. And I would say that what we have working in our favor in those situations is really two things. One is that those assignments are relatively simple, basic, inexpensive. So, on a monthly fee kind of basis, they're not going to break the bank for the private equity fund. Secondly, is over the last decade in private equity, there's been a shift or a migration towards focus. So 10, 15 years ago, it was very common for a private equity group to say, we are industry agnostic. We will invest in absolutely anything except real estate, restaurant, retail, or, we're not life sciences, biotech, medical device guys, but we'll invest in anything else. Today, that would be very unusual to have an investor say, we're industry agnostic. It's much more common today for someone to say we're focused, and what we focused on is services. And they think that's wonderful. They think, we're really laser focused on the word services. Well, when you break that down, industrial services has something like 400 four-digit SIC code segments. And then business services has more than 500 four-digit SIC code, service. Healthcare services has several hundred. So that word services sounds like it's really focused because it's one word, but in reality, if you're dealing with narrowing that funnel from over 1,000 different segments down to 25 or 50 that you could legitimately hand out to a bank or a broker, an intermediary, a finder, your business development team, and say, these 25 are absolutely in our sweet spot. They're in the bullseye. We're locked and loaded. We're ready to go after these 25. If you find anything here, bring them to us. We're going to do that deal. That can be very compelling. And so private equity funds today realize that it makes sense to do that. And their limited partners, their investors, have come to expect that they're able to articulate that degree of specificity of where they're focused. Not only where it's attractive, but where are they best served to focus given their experience and so forth.
So your firm does several different types of projects, as you've discussed. I'm curious, to what degree have you worked on standardizing the process, coming up with a standard deliverable, kind of a standard set of slides, a standardized work plan, so that you don't have to use brain power every time you do a due diligence project, but you can kind of whip out, okay, here's the 4-week work plan, here's what we should be doing on day 3, and here's what the slides should look like. I found doing these myself that it requires a ton of creativity and thought to come up with that. And given that you've been doing this for 20 years, I'm wondering if you've invested in building that as sort of a repeatable process so it can be done a bit more efficiently. Could you talk a bit about that?
That's a great question, Will, and I'm glad you asked it. We've learned years and years ago that this work, particularly commercial due diligence work, that's often done in a crazy window of pressure, time pressure, urgency in terms of, making sure we get it right. Our clients are nervous, they're focused, they're type A, they're very, very intelligent people. They poke and prod and challenge. So we're working under some very extreme, unusual business circumstances. And you're right, it makes all the sense in the world to develop templates and formats such that you just kind of plug in. But the reality of this is that this is a combination of art and science. And the science is having the template, having a format that makes life easy and efficient. But the art is recognizing that every single transaction is different. Every client is different. The decisions that are being made around, size or growth are different. So the language, the nuance, the descriptions, they're all a little bit different from project to project. So it's a balance, I would say, between the art of being creative and flowery and thoughtful, and we talk about being actionable, making sure that we're offering ideas, options, recommendations to our clients to help them grow the business after the acquisition, and also being very technical and scientific and matter of fact and template-ish. So it's a delicate balance.
Mm-hmm. Now, I understand that your firm has about 30 full-time, or 30 folks, either full-time or contractors, supporting you at any one time doing the work.
Yep.
Could you talk a bit about how you've kind of grown your book of business over time with private equity firms? Is it relatively small number of firms that you're doing a ton of work with, or is it have you grown by the kind of cold calling or outreach, or is it more a diffusion where one person goes from one firm to another? How have you kind of built your business over time, and what's been your kind of marketing approach?
Yeah, I would say we are a very, very small but extraordinarily good service provider in this huge world of mergers and acquisitions and private equity. So in our world, Bain Consulting is the gold standard, and Bain is enormous, extremely highly respected, and very, very expensive. We're very, very small, very focused, very good. We don't spend any money on marketing. We don't do any cold calling. We've benefited from, I'd say, two very simple factors. Factor number one is the efficiency of business development and marketing in the world of private equity is amazing for one reason, and that is the Association for Corporate Growth, the ACG. So middle market companies that are looking to grow or looking to be acquired are members. Portfolio companies of private equity groups are members. Private equity groups are members. And then the service providers and investment banks that surround these transactions are also members. And at these ACG events, and I've been a member since 2004, and I've gone to dozens and dozens of their conferences all over the country, there's a very unique aspect of the way these things are set up. The private equity groups themselves, in other words, our clients, are in a football field-sized room in a conference center, standing behind tables, waiting for people like me to come up and talk to them. Now, admittedly, they're really waiting for an investment banker or an intermediary to come to them and say, I think I have an acquisition that you might be interested in here. It's an interesting little company for sale. But they're happy to talk to me. And that's very, very unusual. It's an incredibly efficient way to go about marketing yourself and promoting yourself to these private equity clients. The second reason that we've been successful and have grown the business is that we've just done a phenomenally good job. So that means that we get referrals. That means when one individual leaves one fund and goes to another fund, they bring us with them. And then our clients themselves have grown over time and certainly do more deals today than they did 20 years ago. But we're lean and mean and focused on really doing a fantastic job of high quality work and a high degree of customer intimacy.
How do you just kind of remain top of mind? does your firm work to generate thought leadership, or do you have like a CRM system where you're reaching out to past clients with phone calls or with emails? So how do you just, keep reminding people that you exist so that when they have a need that they give you a ring?
Yeah, it's another good question, Will. The concept of being relevant and being, having something of intellectual value to share is very important in the world of professional services surrounding private equity. So you can't really call these people up and say, hey, I just wanted to make sure we were on your radar screen, think of us, or hey, it's been a while, haven't talked to you in a long time, wanted to circle back and see what's new. That's sort of wasting these people's time. They're very sophisticated. So one of the things that we try to do is, as you said, it's providing intellectual property or providing something of value that's a gift, that's an offering to our clients. And I'll give you a simple example. During COVID-19, we've obviously not had as much work in the 4 months since COVID-19 started as we did prior to that. And we put our consultants to work. We did a pretty exhaustive study, and happy to make it available to any listener who wants it. We call it Project Prescient, and it's all about the changes that have happened in 5 discrete industries that were the result of habits being changed by individual people within those industries. And it's a fascinating sort of, it's almost like sociological assessment of change. And so we found it very interesting, intellectually interesting. We shared it with our clients, and they wrote back and told us how much they appreciated it. They found it interesting as well. And that's a really good example of just staying top of mind in a way that's not pushy or, in other words, we're providing value when we're reaching out.
That makes sense. Okay. Tell me a little bit about, so you've really built a firm that's beyond what a lot of the listeners of this show have done. Most of the listeners are independent consultants. You've been building a firm. Tell me a little bit about how you've thought about creating career paths for your firm employees. Do you bring folks in that are already experienced, or do you hire people kind of fresh out of school and train them up in your methodology? What's been your approach to cultivating and recruiting and growing the talent of your firm?
We believe very strongly in avoiding at all costs hiring young people fresh out of school. We believe very strongly in hiring or in collaborating with experienced, talented experts that know what they like to do, know what they're good at, know what they want to be a part of. And I think we've done a very, very good job of building some cohesiveness across, a network of, as you said, some employees and some 1099s that work with us exclusively and on a regular basis, and some, might only work with us on a project per year. Excuse me. So I'd say one of the things that we've been strong at is knowing what the characteristics are of a consultant who's going to fit within our organization, and knowing the skills that we're looking for, and then somehow finding them or learning of them or being introduced to them. And a lot of it, actually, come to think of it, has just been, hey, you should talk to this person. They're a friend of mine and they're good, and I recommend them. And that carries a lot of weight. But when we've been proactive as well, the answer to your question is we've always been successful when we've gone after people that are much more senior than, say, our competitors would be comfortable with. Most consulting firm models are to have a pyramid-like structure where you have a lot of 20-somethings at the bottom, and we just don't think that makes any sense at all.
Do you tend to bring in folks that are former consultants, or do you bring in folks that are, sort of alums of private equity firms or experienced industry people? What's your typical model?
There is no typical. I would say we recruit for and look for people with a lot of intellectual curiosity, a lot of social EQ, the ability to work as part of a team well, just basically being curious, investigative journalist types of consultants. So we have hired someone, we do have somebody on our staff who's a private equity professional before they were with us. We've hired somebody from, an ex-McKinsey consultant. We've hired people from other top tier consulting firms, Parthenon and LEK come to mind. But we've also hired people that have spent their entire careers in marketing and marketing research. We've hired industry experts, people that were brought into a project because they knew an awful lot about, how healthcare reimbursements worked. And then we realized, wow, this person is fantastic. I wonder if she would be willing to work on an industrial project. Let's ask her. And she was. And therefore, she migrated from being an expert in healthcare to being somebody that we work with very regularly now.
How have you seen the space of, let's look just in particular at the commercial due diligence type work. How have you seen that evolving over the last 20 years? So, in terms of have providers like you had to get more specialized, or, have you felt that you've had to kind of up your game as more competitors enter and compete for that, or new tools coming in? So how have you seen that space evolving, particularly in the past, say 4 to 5 years?
So commercial due diligence, there's two pretty significant changes that I've observed. One is that 15, 20 years ago, we'd have to explain to our clients really what this was. Like, why does it make sense to conduct this type of work? And how do you do it? And how do you not get caught? And why does it make sense for us to do it and not your junior analyst to do it at the last minute? So that used to be what we had to spend a lot of time and effort doing, was explaining what we're doing and why it makes sense to outsource it. The second big change that's happened just in the last few years is we used to get away with saying we are industry agnostic. It really doesn't matter what industry you're investing in. The process is exactly the same. It could be life sciences, it could be industrial widgets, it could be energy. It really doesn't matter because the methodology of the research is the same. And we could get away with that. But today, no. We've needed to at least explain the industries where we have deep experience, maybe not expertise, but at least experience. And so we list those on our website and in our collateral material. But, frankly, if somebody came to us and said, hey, we've got this anodized aluminum wedge wire used in wastewater treatment, can you guys do a study in that space? The answer, of course, would be yes. But you have to be a little bit more focused and proactive in the outreach about saying what industries you have experience, deep knowledge and experience in.
What do you think about the prospect of artificial intelligence? Have you started using AI tools, or do you see that on the near horizon? AI probably can't do the whole project, but more and more, so many of the things of, maybe identifying the experts or scanning and scraping and making sense of news articles. Talk about AI a little bit.
Yeah, this is a really exciting topic, and it makes us very excited and enthusiastic and optimistic. So far, not a whole lot of impact, but it's coming. It's definitely coming. You mentioned web scraping. So the ability to just say, hey, bot, anything that mentions, market size and frisbees, I would love to know what it says. And by the way, if you don't mind, can you do the analysis and tell us what you think the total market size is in the United States for frisbees? That's coming. And the ability to kind of hang your hat on that and say they've done a better job at that than we could do with a bunch of phone calls is not too far away. We met with a company that did some really, really cool stuff with reviews, and I'll explain. So imagine that you're buying a new pair of shoes, and you buy that new pair of shoes on Amazon or whatever, and you go ahead and you put a review in for how well you like the shoes, and you might describe that, you like the way they feel, they arrived really quickly, and the color's fantastic. Well, this company can take that review and separate out things that you've said automatically. So it's going to bifurcate out your review into different purchase decision factors that you've used. So you're not even thinking this way, but it knows how you're thinking, and it's saying you valued color and style and appearance and speed of delivery, and it did well on those factors. And it can even read between the lines and ascribe scores. In other words, a 1 through 5 scale of how strongly you felt about it in some cases. And then when you have hundreds of thousands of reviews, then it's able to scan all of that data and provide ratings on individual products, not let alone individual companies. But wait, there's more. They can go further than that, and they can provide reviews on doctors, for example, or individual practitioners or service providers. So those sorts of things are not that far off. And we're now at the point that it would be irresponsible to not pay attention to them, experiment with them, use them, take advantage of them. But it would also be irresponsible to hang your hat on them and say, oh yeah, we're just going to let the AI take over. We're not there yet.
Mm-hmm. Fantastic. So Kit, for any listeners that wanted to follow up and learn more about your firm, do you want to share any websites or links, or where should people go?
Sure, thanks. AcclaroPartners.com, and Acclaro is ACCLARO, AcclaroPartners.com. Acclaro is a Latin word. It means to make clear or bright in the mind, which is a good word for a consulting firm, of course. My email is kit, K-I-T, @AcclaroPartners.com. And so I'd love to hear from any listener that has any interest in collaborating.
Fantastic. Well, Kit, thank you so much for joining today.
Thanks, Will. Appreciate the opportunity. Best wishes to you.